Welcome to Vatech America and Vatech Education Team monthly webinar series. This is the November edition. I am Jim Mayer, Education Team Director here at Vatech America. This month I am broadcasting live out of Austin, Texas. Thank you for joining our session today. I always have the pleasure of working with Paul Satone. Welcome, Paul.
Thanks, Jim. Great to be back for another one of our monthly webinar series on a new topic today. So really looking forward to diving into this session.
Yeah, Paul, you and I we started Vatech America, started this education series. We started back in April. We moved to a monthly platform, bringing on different key opinion leaders in the industry. Once everybody kind of went back to work, so we moved these to the evening sessions. We started back in April with some Vatech education software, going through case planning. We moved a little bit into patient consultation. We also had some radiologists join us on our session where we looked at the data sets from a radiology interpretation. And Paul, we just finished up a 3-part series on sleep dentistry. So we've covered a lot of relevant topics throughout the year.
We did.
It's November. I think we have a very fitting topic for today in particular. Paul, what do we have coming up today, and what are we looking at?
Well, financial and tax implications. So we all love taxes, so we have to deal with them the best we can. So today we're going to be talking about financial and tax implications during COVID-19 regarding dentistry. So a really great topic today. We're going to have Amr Alian with us today, who is the managing partner and co-founder of Synergy Consultants out of Virginia, with us today.
Yeah, Paul, it's a very relevant topic, and I think we brought on an expert to help us navigate that field on what to do. Also, how to be prepared for 2021, really maximizing your office workflow and excelling in your office. We're going to talk about this in a little while, but Paul, we have our next series coming up in December. What does that look like?
Yeah, so next month for our monthly webinar, we will have Omar Zier of 3D Diagnostics, 3DDX, and we'll be talking about the digital guide workflow from A to Z, made easy. So, with Vatech and 3DDX kind of partnering together here to kind of give us the easiest and quickest workflow for everything for surgical guides.
Yeah, and that's on our, key opinion leader series, first Wednesday of the month. Paul, we did launch a Vatech education series, really focusing more on the Vatech product line, and that's going to be the third Friday of every month. And this series is really meant for both doctors, but also staff. We want to get everybody involved, create that synergy in the office, and go through maximizing your device, your CVCT software, consultation roles for our hygienists and staff members. What does that series look like, Paul?
Yeah, so if anybody who hasn't been on one of these Fast Track Fridays, which we're doing the third Friday of every month, it's great for new clients, for past clients, potential clients. So we're dividing it up into 2 sessions. It's actually one long session, but it's kind of a session 1, session 2. So session 1 will be all about imaging workflow, patient positioning, 2D and 3D. We'll take a look at some good images, some needs improvement images, and give you feedback on that. Really all based on that, and great for staff and doctors. And then we'll take a break and we'll go right into session 2, which will talk about everything regarding Easy3DI software. We'll look at 4 or 5 different clinical cases for all different specialties and kind of really dive deep into the 3D software itself. Yeah,
and all of these key opinion leader series and this education series that we're doing on the Fridays, we want that to be interactive. So everybody today will also be able to have a Q&A session with us and our presenter.
Right.
Well, how did we come about all this? There's a lot of topics, and what are the best ways to get a hold of us?
Yeah, lots of different ways here. Any feedback on these webinars, anything you'd like to see in the future, please feel free to reach out at the sales email address on the screen there. Any questions for education, that goes to the entire education team. So anything software question related, please email us at education@Vatech America. And the cs@vatechamerica.com email address is a great way to contact support. You don't have time to call, shoot them a quick email. And then, of course, our website, Vatech America, and our social media handles at Vatech America on the social networks below.
Perfect. Yeah, so these topics really came from feedback from the field on what our clients were looking for. So if you do have any suggestions for future sessions, please feel free to email us at education@vatechamerica.com. Right now, everybody should be able to see, kind of let's go through some housekeeping really quick. This is the GoToWebinar screen you should be seeing. You have your presenters at the top and the screen below. If you want to minimize the presenters to show a larger screen there, you can adjust there. If you're having any audio issues and you're using your onboard computer audio, please do click the help button there, or the easiest way is just to phone in. You will be placed on mute, so we don't have any issues with audio there. But this is a question and answer session today. At the top of the hour, a little bit after, what we're going to do is we're going to have a Q&A. So you can ask questions throughout. Paul and I and the education team will be logging these questions to ask our presenter Amir as we finish out the series here. So please do interact with us throughout this session today. Unfortunately, we are not able to provide CE for today's presentation, but we do have some really good content for you. Like I talked about, Paul, we do have the Q&A at the end of the session, so please interact with us there. Paul, do you want to go ahead and do introductions here?
Sure. So Amr Alian of Synergy Consultants is, let me bring him on here. He is the managing partner and co-founder of Synergy Consultants. They are based out of Virginia. He's been advising dentists and medical doctors for over 10 years. And let's bring him on. Welcome, Amr.
Thank you so much for the introduction. I hope everybody can hear me clearly.
Yes, we can.
Yes.
Great, great. So thank you so much for the introduction, and thank you for taking the time for organizing such an important session before year end. I'm sure most of the attendees attending with us tonight have so many questions. I would like to welcome any question, either through the chat or through the Q&A at the end. Also, I'm going to provide my personal contact information if you would like to reach out to me for any further questions or would like to discuss any specific situation. Please feel free to reach out to us. To give you a quick a background about what we do at Synergy and who we are, Synergy Consultant and CPAs is a dental consulting and CPA firm out of Washington, D.C. metropolitan area. We work with about 600 dentists nationwide. And the concentration is in the East Coast, but we already have some, I would say, footprint in Texas and the West Coast as well. We work with dentists mainly who are looking to improve their profitability, their tax planning, making sure that they understand how to run a very efficient office, very effective office, getting a good return on their investment, being able to achieve a financial freedom by the age of 45, debt-free, and being able to generate passive income out of their dental office. So tonight I'm going to go through my presentation. We're going to be talking about multiple things that I think is going to be an interest for you, to talk about cash flow management, taxes, grants, and PPP loan questions that you can ask me about. And also we're going to talk about what's next. What are you expecting in 2021 in the dental industry? What should you have done different to be prepared for a pandemic? I hope we will never go through another pandemic or another shutdown, but in case if it happened, how can you position yourself in the market to be able to face it in a more liquid and more, I would say, strong position. So Jem and Paul, is my screen is shared now, right? You can see my screen?
Yes, we can see your screen, and yes.
Yep.
Okay, good.
Currently, we are seeing your financial and tax implications of COVID-19 on dentistry slide. Yes.
Sure. I'm hiding here. Okay. So first, I would like just to give you financial disclosure. We have no financial conflicts of interest to whatever we're going to disclose now or anything with Vatech. So we are an independent company. We have no financial ties with any of the host company. So the objective for tonight is we would like to understand how can you manage your cash flow at the dental office, and what are the metrics that you need to understand in order you maximize your cash flow. Secondly, we're going to be looking at the PPP, HHS, and EIDL loan, and understand, if those government support tools were not available for you, how would you have been able to survive the pandemic? The question that you need to ask yourself, would you be able to survive without the support of the government? And if the question is no, then maybe you're going to need to ask yourself, how can I prepare myself where I can face another emergency at the office or at the economy, which we call it either systematic risk or unsystematic risk, and being able to making sure that my office and my business will survive. I have some clients who has 10, 15 dental offices, running a 15 dental office or shutting a 15 dental office or managing employees at a 15 dental office operation as a small DSO is quite a bit of a challenge. So how can you get there and you think about your dental office as an enterprise, as an organization where you need to survive any obstacle? The fourth one, you need to understand how can you look at your P&L or your financial statement every month and understand how much I'm making out of this office, how much I'm making in my pocket, how much is saved for future emergency. And the final one is how can you benchmark the practice? I'm sure back at school you used to benchmark yourself against your peers at the class or at the dental school, or we always look at benchmark. We'd like to see where do we stand compared to our peers in the industry. Where can I improve more? Where is my opportunity area? Should I add second location or should I expand my existing location? Can I add the second hygienist or I add another associate? If I add another associate, how much that associate should get paid? Those are the questions that it's very important because those decision-making process will impact your bottom line, which I call the profitability. A lot of us, we focus most of the time on the top line, which is how much collection I'm making. It's great. Collection is very important. However, how much are you retaining in your pocket is more important. I have seen offices who are producing $4 or $5 million a year, but the owner takes home less than the associate who's working at the office. Those are the challenges that a lot of you will have or might be facing now, and that is the time where we need to figure out how can you improve those benchmarks at the office. So just to give you quick facts, about less than 10% of you will be able to retire by the age of 65, and that's for so many reasons. Number one, low savings level between dentists, high tax brackets. On average, a dentist makes about 3 financial mistakes during their career. And the final one is a lot of us stretch our lifestyle, and that impact our decision of when we can be able to retire. Secondly, almost 70% of dentists, they pay about $15,000 to $25,000 extra taxes a year. If you take a quick math, let's say average $20,000 a year, you work as a dentist for 20 years, this is $400,000 of wasted tax money. If you would have invested this $400,000 at 5%, probably you're going to be looking at $750,000. So $750,000 of money that a lot of dentists overpay in taxes. Finally, is when you look at the practice value, you have to think is at the end of the road, when you decide to retire or maybe slow down, you need to understand your practice has a value. That value will represent a big portion of your retirement money. So if you grow your practice in a healthy, profitable, you're going to get more money. If you're going to grow your practice in unhealthy, unprofitable, then you're going to get less money. And this is the time from now where you need to get used to run it in a healthy way, because again, running your dental practice is a lifestyle. So we cannot say, it doesn't matter, I'm going to grow now, I'm going to spend all this money, I'm going to hire all these people, I'm going to do this, I'm going to do that, and then 5 years before I retire, I'm going to change it, I'm going to make it very profitable, then I'm going to sell it. I can assure to you that this will never happen, because your lifestyle will be running your office, I would say, without understanding how can you cut down your expenses, how can you make it more efficient, how can you make it more profitable, how can you make your dental office has higher value when it comes to selling your practice. And then finally it's going to be about efficiency at the office. If you understand your office, you understand your treatment acceptance rate, new patient count, acquisition cost of new patients, recall, how many patients coming back, your hygiene production, your peri-production, then you're going to reach to the optimum level of profitability. Okay, so when we talk, go back again, a lot of dentists during the pandemic, you know, they have been worried about what you have here in front of you. Is my practice overhead should be enough to pay for my practice overhead, for my debt service. If you have a bank loan, you need to build up your working capital reserve. If you have any estimated tax payment, and then your lifestyle, your retirement, your investment, your education, your all those things, you know, that those are expenses that comes every month. And your job or your goal every month to produce enough to be able to cover those buckets. You know, if you come short in one bucket, then it will affect the rest of the buckets. For example, if you don't retire, if you don't save for retirement, what's going to happen for you? You're going to have to work furthermore. If you don't have enough money to pay for your mortgage, it will impact your, I would say, production and how you're going to focus to go to the office if you're struggling to pay your debt, either the office debt or your personal debt or your student debt. If you have back taxes and you have been running on treadmill with the IRS every single year, you end the year and you still owe them some taxes, and then you do a payment plan and then you go back again. By the time you pay off your payment plan for the prior year, you already accumulated more taxes this year. That will put so much stress on you. That won't help you to become more productive at the office. You know, that will impact the dynamic at the office, your success rate at the office, your treatment acceptance rate, because you are not in the mood to discuss treatment. Your mind is not there. And then finally and this is the most common mistake, is a lot of dentists, they take the money out of the office, they make a lot of distribution without keeping enough money reserved. You need to understand, you need always to keep a reserve at the office. So during the pandemic, my average bank account, or like office bank account, was $137,000. $137,000, which means most of my clients were good for 3 months to survive without help of the government. On the personal side, the average cash reserve was $92,000. So between the office, between the personal, combinedly, we had on average about 220 to 230 in cash reserve. And that's what I was talking about. You need to build up your cash reserve, because the cash reserve will make you feel good about yourself. You're going to be able to sleep at night. You're going to be able to say, if anything happened tomorrow, systematic problem, unsystematic, you have enough money to cover for the office overhead. So what's your cash reserve? You need to have at least 2x your monthly overhead. So And the way I'm going to look at it is, if you are $100,000 an office a month in collection, I'm expecting your overhead, excluding your own salary, to be about $55,000 to $60,000. So if you multiply by 2, that will give us $120,000. That should be your average cash reserve account. And then you need to have 6 months of emergency cash saved in your personal life. And on average, a dentist will need about $15,000 a month between mortgage, personal expenses. So if you multiply it by 6 months, that would give us the $90,000. So some of you are going to say, oh my God, my home mortgage by itself is $20,000 a month. What should I do then? So that's a good question. So I will tell you, of course, if your home mortgage is 20, so I'm expecting your average monthly expense is not going to be 15. You need about 45 to 50 a month in liquid cash, or like I would say disposable income. So over 6 months, this is $300,000. So keeping $300,000 liquid, not invested at the bank, doing nothing, is not the smart decision. So what I would advise you is you keep about 100, 120, or maybe 150, which is half of what you need. And then you always need to have a line of credit on your office, or a line of credit on your house, where you can dip in and get an emergency cash out of it at very low rate. Don't use credit cards, don't take cash out of credit card, don't do that. But I will do it where I would invest this money somewhere on the market, and I will have an extra access to cash through a line. So those are the targets for overhead for any office by specialty. By far, you can tell that endodontists are generating the highest buck on the investment. Oral surgery comes in number 2, pediatric, and then perio and ortho, and then general and perio comes almost 48, 46%. So what I would say is, if you look at overhead, you need to target those overhead in order for you to succeed, right? And if you miss your overhead target, that means what? That means you are working, but you are letting extra money walking out of the door every year or every month, where you could have retained this money in your pocket. And that's a lot of dentists don't pay attention. So for example, if you're running $1 million practice, and you have an extra 4% overhead between lab, between dental supplies, between overhead for the staff, compensation, payroll, though 4% equal to $40,000 a year. $40,000 is equal to about 31 crowns. So imagine that 4% for $1 million office equal to an extra 31 crown with no lab fee, money that would just come to your pocket. Imagine you do another 31 crown, headache free, no lab, and that's 3 months. So again, let's run this model again. So 4%, $40,000, 20 years, this is $800,000. So if you're wasting 800 in overhead, and then you are wasting about 300 or 400 in taxes, this is a $1.2 million over the lifetime of your practice that you have given away to the IRS and to different vendors that you are dealing with. Okay, so how can you drive value here quickly? And you need to understand those percentages. If you don't have or if you don't track those percentages, then you are running your office blindly. It's very similar that if you're gonna decide to have an implant without having a CT scan or a pan or an X-ray, can you imagine what type of implant it's going to end up to be? So if you're going to run your office without understanding those percentages, you are running your office hoping that at the end of the day you are making money, but Those are very important. So I'm going to go through them quickly. If you have a pen and paper, put those targets down. Your treatment acceptance rate should be 60%. And that would be a great acceptance rate. A lot of dentists, when I talk to them and I ask that question, what's your treatment acceptance rate? They usually say it's high. And when they say high, I usually say, okay, what's the definition of high? And they say it's very high. And I say, okay, so what is the definition of very high? And nobody were able to give me a number, but everybody's saying that I have a high treatment acceptance rate. So until you have a number where you can benchmark yourself to, your treatment acceptance rate is just a number that has to be benchmarked very similar to other things. Second, a lot of dentists, they don't focus on their hygiene. They just focus on their production. And this is a double sword way of running your office. If you're going to do a lot of implant and you don't focus about your hygiene, so you're running your life as a hunter. You need to hunt every day. If you cannot hunt, you don't have dinner. But the hygiene is like farming. When you farm, you can always get something out of it. So if you run your office in a mix between hunting and farming, you're going to always have food on your table 365 days a year. That's number one. Number two, the hygiene has high value at your office. So when you decided to sell your office, usually a buyer will be looking to buy hygiene patient. They're not going to look to buy Invisalign patient or implant patient, because those patients, treatment is done, they're gone, they're not coming back. Finally, you need to understand that your account receivables is the most important thing at the dental office. If you produce, you market, you do great treatment planning, patient accepted, you have a great hygiene percentage, but end of the day, nobody collect your money, that means you are wasting your effort and wasting your money. You need to make sure that your account receivables does not exceed 60 to 70% of your monthly production. Recall, you spend the money on marketing, make sure this patient come back again in 6 months. If your front desk doesn't focus on recall, that means you have a bucket with a big hole, so your acquisition costs and your cost of your new patient will go up dramatically because you cannot grow. So on average, you are losing about 15% of your practice every year due to change in insurance, change in lifestyle, people, moving away. So that means you need to add more than 15% of your practice in your patient. If you are not going to get your recall up to a level where you can shrink the gap between your recall and your people working out, your practice will shrink. And I have seen it a lot, that offices is going down year after year because they have a big bucket of bad recall system at the office. Finally, you need to have a target for yourself. You need to have a target for the hygiene. You need to know how much I'm producing and collecting at it. Your hygiene, you need to have a period target. You need to understand they are not a cleaning department. They are hygienists. Hygiene, they need to do proper hygiene. They need to have a proper record. They need to take x-rays. They need to do intraoral camera. They need to able to pave the road for you to talk about treatment. So when you have a good hygienist, 80% of the treatment planning and 80% of the treatment discussion with the patient, she or he will be able to do it for you because they already educated the patient about what do they need to do or what's need to be done. Those are statistics. I'm gonna skip them, but I can, I'll be happy to share it with you later on, just to keep track of time, because we're gonna have so many topics that I would like to cover tonight. So I'm gonna move now to the PPP loan, and a lot of you probably right now working on the forgiveness phase, and a lot of you now have so many questions about the loan. So first of all, if you think about it, is your PPP loan is money that the government gave it to you in order that you survive the pandemic. So the purpose of the loan or the money is kind of line of credit, but if you use it the right way, the government will give you a pass and they would forgive you. So most of my clients and most of the people I have talked to, I believe they're going to be able to forgive 100% of their money, because 24 weeks is enough time or enough period where you're going to be able to spend the money over payroll expenses. And if you're going to use the other metrics that we gave it to you, which is rent and utilities, that should be sufficient for you to get 100% forgiveness. Okay. People who took less than $50,000, the process and the application will be so easy, super nice, so you shouldn't worry much about it. So, of course, I would expect that every one of you will go to the 24 weeks. No one needs to do the 8 weeks, because 24 weeks will give you enough time. You don't have to panic. You don't have to start the forgiveness process right now. Reach out to your bank, ask for the portal or ask for the process that your bank is asking for. Go ahead and do it. Take your time. Make sure that you have all the reports ready before you start the process. Usually your payroll company will have an option in their online where you can run the reports that needed to put a support document. You can also need to have your bank statement ready. If you have any checks that show your rent, show your health insurance payment, and show your 401k contribution or profit sharing contribution, I will make them ready to upload them with the rest of the documents. EIDL grant, I think everybody got the grant, and you're going to be able to put the grant. It's going to be part of the PPP forgiveness. When you fill out the application, they're going to ask you how much grant you received, and then it will help in the process. The most important piece here that I think caused a lot of confusion is the EIDL loans versus the EIDL grants. The loans, it was a loan that the government extended this money to everyone with a very flexible terms, 3.75, 30 years, and your first 12 months is a deferred payment. However, you are accumulating interest as of now. So at the beginning, when the pandemic happened, and Dennis has been asking me, should we take the money or not? My first response was, if you had access to a line of credit from your bank and your financial institution, then you don't need to take this loan. I would only take this loan if you are a startup practice where you didn't have enough liquid, because you didn't have enough. For example, like I have some offices, they started December of last year, the office, and some dentists even started February of this year. They had a very rough start. So those dentists didn't have enough time to build up their reserve cash, didn't have enough time to build up their personal cash. And if they go back to the bank and they requested any extra money, I don't think a lot of banks, they said, you know what, you don't have strong financials, so I don't think we're going to give you a line of credit. So EIDL was an optimum solution and lifeline that was given by the government to them. And I think keeping this money, if you're in such a situation, is very wise, even if it will cost you interest payment every month, because that will make you sleep at night. That will make you feel confident. That will make you thinking, if anything happened again at the office, I have this access to $150,000 or $100,000 as an emergency cash. The only catch for the EIDL is you cannot take this money and you go buy equipment. You cannot take this money and go buy a car. You cannot take this money and go upgrade your house or acquire another dental office. This money is basically for operating expenses for your business. It will help you to buy further supplies, if you need PPE investment, if you have to change and modify something at the office to adapt to the new regulatory and CDC, then yes, you can use that. But if you're going to take this money in order for you to go acquire another office or buy another car or buy anything that's basically as an investment or take it as a bonus for yourself, then that might open the door for the SBA to come, call the money, ask for the money, and could also be exposing you for further problems with the SBA. I always ask my clients to keep the EIDL money in a separate bank account and make sure that they have good records of how they use the money, just in case that the SBA asks for documentation, which right now maybe nobody will ask you for anything because SBA is so busy with PPP and the forgiveness. But I'm sure in a couple of years from now, for them to maintain their workforce, they're going to try to keep them busy. And the only way to keep them busy is by going back and auditing all those grants. HHS phase 3, a lot of clients have been reaching us asking for about the phase 3. Of course, the phase 1 and phase 2. I hope that everybody were able to get money through the phase 1 and phase 2. Phase 3 is getting more like restrictions. So you need to consider the following before applying. You need to understand is if you received a PPP loan or PRF payment under phase 2, you are eligible to apply for phase 3 with making sure that you have to prove that you are really getting impacted from the pandemic. So, so the phase 3 will initially provide funding to those who either were not eligible under 1 and 2 or did not apply for the previous one. And then all offices or like all the application, the deadline will be November 6th, which means we have a couple of days left. Payments will not be considered until the application period is complete. All applicants received by November 6th, deadline will be considered. The payment for the third payment will be different than the second payment. We're going to consider documentation of the financial impact of COVID-19 on the business. So you have to show that your business has got impacted somehow, somewhere. That's why they're asking for a lot of financials for the phase 3, because they really want to make sure the money will go to the impacted offices. So here I reach the end of my presentation and I can start taking some questions about this presentation or about any other topic you have.
All right, thank you, Amr. We do have a lot of questions coming in. And I think let's start here with one from Matt. It says, can you talk about the FFCRA tax credit for employers having to pay for employees being off of COVID?
So again, usually what's going to happen is if how big or the size of this office was asking this question, or the dental practice, because medical professionals and any business under like 50 employees, they're exempt from any payment that they have to do for COVID related to any employee. So if you are a small office and you have one of the employees are impacted by COVID, they got COVID or they have kid at home and for childcare, you are not obligated to pay them. But if you decided to participate, to take some sort of credit, then you're going to have to work with your accountant, to work with your payroll company to see how can you claim a credit from the IRS for your portion of your employer taxes.
Perfect. And yeah, maybe that gentleman will reply back if he has any other questions there. Paul, what else do we have in the chat there, or the Q&A?
We have another question here from Gary, who's asking, should we apply forgiveness now, even though the expenses covered by PPP would not be tax deductible?
You know, as of now, we don't know how the PPP would be taxed. So there are so many theories outside that you can think of. Number one, it's either the IRS would say all the money that got paid from the PPP money won't be, as you said, deductible. So it's not going to be in your P&L, and it's going to be more of your PPP money. The other way, which might be simpler, which I think that's what the IRS would do, is they might tax your PPP money at a lower tax rate. Okay, and right now when I do my tax planning, and actually that's a good point, because I would like to highlight something about the year-end tax planning, is PPP money and HHS grant will be taxed in a different way. We know for sure that most of the local grants, county, state grants, HHS grants, those are going to be pure income. So technically, you're getting this money to offset the lost revenue during the pandemic. But the PPP, as of now, there is no information about how it's going to be taxed. My expectation would be part of your revenue, but they might put a new bucket in the tax return to show the money coming only from the PPP versus your revenue as a dentist. And then that PPP money will be taxed at a lower tax rate on your K1 or on your Schedule C or on your tax return. That's my expectation. This is how they're going to do it. You know, I hope they don't like treat it as if it is an income. They might end up treating it as a long-term capital gain. This is another way of treating it as a long-term capital gain. Okay. However, when you work with your tax professional at year end, I would like you to look at 3 important things. Okay. Number one is you need to plan your PPP impact, your HHS money impact, local grants impact. That's number one. Number two is how you're going to plan with the change, maybe potential change in administration. So you have to look at how can you get prepared for 2021 from tax standpoint, because there are so many changes might be coming, and the most common one would be the capital gains. So for example, if you have a lot of stocks that you already have capital gain, I would maybe try to sell them and take the capital gain at the lower rate, or maybe you need to lock them, do something called like revolving your portfolio to sell the high capital gain with some losses. But you have to position yourself that 2021 taxes will be totally different than 2020 if you have a change in administration. That doesn't mean that one administration is better than the other, by the way, because right now you're paying high taxes as well for the SSTP because you're already a professional organization. So the question is, are we still be taxed as a special professional organization at higher tax rate or not? And those are the questions that you have to work with your professional tax expert. Finally, is I know that a lot of you know, of my clients, they try to buy the equipment at year end. So when you buy the equipment at year end, you need to meet the most important criteria, which is it has to be installed. So make sure that you work with your dental supplies company, your equipment company, and make sure that you can install it. It's not about you pay, or it's not about you sign the contract. It's that the equipment has to be installed. Finally is, which a lot of the questions that I get a lot is car expenses and how can we get benefit from our cars. You know, if you have two locations, yes, you can have a business car and it's easy. And actually, at year end, you can always get a nice truck and you can write it off, similar as an equipment at the office. Okay. However, you know, if you have only one location, so you're gonna need to buy a car, but you need to justify why you have the car. And this is where your CPA or accountant need to become more creative on how they can justify to the IRS that you only with one location you can have one car. 401k, make sure that you have 401k, maximize your 401k, maximize your contribution and deferrals, make sure that you have a profit sharing, get advantage of those tax deferral tools or tax exemption rules, because we don't know what's going to happen next year. They might change the limitation, they might change the amount of money that you can put away. So take the advantage now, take the most advantage of whatever the system is giving you right now. Remember, when you put money away in a retirement plan, you are saving about 28% on your taxes. So every $10,000, you are saving about $2,800. That plus your tax, state tax on the top of it. So focus on your tax strategy now. You have still 2 months. You need to spend at least an hour with your tax professional to plan the year-end tax professional. One other one, and then I'm gonna pass it to Jim and Paul to see if we have more questions, is there is a tax rule called the Augusta rule. Augusta rule means, you know, the Augusta Golf Tournament in Georgia, because of the tournament that happens every year, there's a flood of people who go to the area and they try to rent a house, but there is not enough houses. So the IRS came out with an IRS rule which will allow you to rent your house up to 14 days without claiming rental income. So without putting your house as a Schedule E. What does it mean? It means that you can have your Christmas party at your house, you can have your Thanksgiving party at your house, all your specialists, all your referral sources, all your patients, all your colleagues, when you invite them to your house, plus your board of director meeting, when you do your annual meeting, if you have a staff retreat meeting, if you have training, you can use your house up to 14 days, and you can let your office pay rent to yourself to cover the rent for those 14 days without claiming the rental income in your personal, but you can claim the rental expense under your business. Paul, Jim?
Yes.
Okay. Yeah. So I'm going to go back to Matt. He asked an earlier question. The question is, we are a very small office, only 6 employees. Where would I find the exemption information?
If he can send me his contact information, I will put him through the right link and the right information to find out for his question.
Got it.
Perfect. And we will have your contact information on the follow-up email that we will be sending to everyone, so they will be able to get in touch with you.
Okay. Jim, do you have any on your end?
Well, I know we had Mr. Gary had talked about remember what you had just finished up. He had a follow-up with what are the requirements for HHS money forgiveness and when do you do that? Sounds like you may have covered some of that.
Actually, HHS is a grant, so you don't have to file for any forgiveness. You might be audited on the future to make sure that the money has been spent on the right location. However, it's not a loan, it's a grant, and a grant means it's money given to you for the purpose of mainly cover your overhead, get prepared for the, you know, any adjustment at the office, buying PPE, and like getting PPE, sorry. So everything has PPE now. So get ready for those, you know, for for the adjustment for COVID, spend the money on dental supplies, dental lab, etc. So HHS would like to see you are spending your money back on the office, not taking the money in your pocket and going to buy a private car or an extra car or something that's not related to the office.
Perfect. So that kind of leads into another question we have. It says specifically about that HHS grant and filing forgiveness. Do they just need to show what they've spent the money on?
I don't think you need to show anything now. Again, it's going to be an overwhelming process for any audit to happen, right? But I think usually, the nonprofit and government institution and states, when they provide grants, they might be randomly auditing recipients just to make sure that this money has been spent on the proper place. So just make sure that they know how the money was spent, make sure that they understand the rules and the condition of the HHS money, of how they could be the money spent, but there's nothing to do. Just take the money, use it. Technically, HHS money is money that was given to you to make up for any losses or for any revenue during the shutdown. So technically, it's one of the things that I can guarantee for most of the attendees, that a lot of you might see your collection went down, but your taxable income will end up to be higher this year, because you have been receiving so many grants, you have received the PPP money, and your expenses went down. Your dental supplies probably went down during the shutdown, your lab was down, you let some of the staff go until you got the PPP money back, and you collected your AR during the shutdown. Remember, when everybody shut down in March, what happened? Your April, even you did not produce enough in April and May, but you have been collecting money for January and February, right? And then you got the PPP, and then you got grants. So you have to understand is your taxable income this year might end up to be higher than the prior years, even though your collection is lower than the prior years.
Perfect. Speaking of, the grants and taxation, we do have 2 or 3 questions I think we can kind of loop here together. Let's start off with just grants in general. I've got one question coming in about some state grants. Are they taxable as well? Another question on the HSRA and the PP funds, will they be tax deductible?
Okay, state grants, I cannot talk about it because each state might be different. So I don't know what state and what was the stipulation about the money and regarding the grant. However, when we have a word grant, usually it's going to be considered income, revenue. It's not a loan. So government gave a grant, you take it, you pay taxes on that money, and part of your income. Going back to the questions about PPP and HRS money, right?
Yes.
Okay, so PPP, again, PPP money, we don't know how it's going to be taxed. HSRS will be very similar, where it's going to be taxed as a grant, as a money, as an income.
Okay, perfect. I have a couple more questions coming here. That's what we're looking on.
Okay, here we have one coming in from Faisal. Would Amber recommend buying equipment cash or financing by year end? So from now until the end of this year.
Okay, so it's a very good question. It doesn't matter how you're going to finance it or how you're going to pay for it, because that won't impact your taxes. So the question is, do you have the cash, or you can borrow at free money from the bank now? To answer this question, I would have to look at your full financial statements to see if you have $400,000 in your bank account and you are not going to invest this money and you have extra cash, then definitely I would pay cash. If you are, if you have about 120 and you are barely meeting the threshold of cash reserve that we usually shoot for, then financing at 3%, 3.5 won't be a bad idea. I think that would be better to preserve your cash. And at the end of the day, you're going to get the same tax write-off.
Perfect. Okay, we do have some questions on, you had talked about production and wanting that to, I believe you said about 60%. We do have a question of what is the average hygiene production, or what should it be at the practice? Do you have any averages?
25 to 30% of the total office collection
would be your average hygiene production. Perfect. Following up with that, it says, when you count the overhead, does that include doctors' W-2s?
Doctor owner or doctor associate? Doctor associate, yes. Doctor owner, no.
Okay, so not the owner, but the associate. Perfect.
Mm-hmm.
All right. We do have a couple questions coming in here, so we're right now kind of filtering them out, so bear with us here. I have a one of my doctors is saying, my accountant has stated that he does not believe in purchasing equipment to offset taxes for year end. Do you have any thoughts on that, of the offset of purchasing or offsetting your taxes?
It's let me rephrase from my standpoint. If you're going to buy equipment that you don't need to save taxes, then don't ever do that. But if you're going to buy equipment that you need and it will save taxes, then definitely makes sense. So a lot of dentists who went to buy so many equipment that we don't use. So for example, if you're going to go buy a CEREC machine and you know that your office is not a CEREC office because you have high volume, you don't have enough space, you don't have an extra assistant, then you end up paying $150,000 for an equipment that you're not going to use it. Yes, you're going to get tax write-off, but the equipment will be collecting dust. But if you're going to ask me, what if I go buy, let's say, a scanner, an iTero, a CT scan, then you're going to go back to ask yourself, what value this is going to add to me? If the iTero is going to help me to sell more Invisalign, then yes. If the CT scan will help me to do more implants and being able to diagnose better and get my retreat and my endo and my sleep apnea, then yes. But if you're going to buy the CT scan and you're not going to use it, just you're going to buy it for the purpose of having a CT scan, then of course no. So the answer to this question is, buy the equipment that you need. Buy the equipment that will make your life easier, efficient, profitable, being able to sell treatment plans, improve your acceptance treatment, etc. Those are the most important things. And then the second benefit would be taxes. Yes, you bought an equipment, great. You're going to use it for the office, but you're going to get tax benefit. I have a lot of clients who try to upgrade like their scanner every year, or they upgrade their milling machine every year. It's not wise. Like you already got one last year. Why would you try to do it again? Not for tax purposes. If you're going to do it for tax purposes, don't do it. But if you're going to do it because the new upgraded version will be able to be 4 times faster, then yes.
Okay. I do have a question on here that I'm trying to get some more information on. It says, best scenarios for startup, ? And Mina, I'm going to follow up with you and ask you if you could kind of expound on your question of best scenarios for startup. Or maybe Amr, do you have any thoughts on, doing a startup practice at this time during COVID, et cetera? What are the best practices for doing that? Either starting your own practice, purchasing a practice. What are you working with your clients on?
Okay, so this is a very lengthy question. So let me slice it and dice it a little bit. Okay, so if I have 2 options in the same location, one is startup and one is an acquisition, I will definitely look at the acquisition first, because the acquisition will come with patience. So that will save you about 2 years until you build up your cash flow. But Sometimes a startup will allow you to go to a specific market that will make you, I would say, I'm not going to say monopoly, but some emerging areas that has been happening in the last 10, 15 years when we get a growth and a lot of new development happening around the metropolitan area, then maybe a startup would be a great idea because you're going to be able to capture all the new construction and all the new movers who will be moving to that area. So we go back to Austin, Texas, and Dallas in the last 10, 15 years. A lot of startups has been successfully done very, very well. We call it the de novo. But would I go to downtown New York and I do a new startup? No, that's not the right place to do a startup. So you need to identify where are you going, who are your competitors, who are your patients, what are you trying to attract? Are you a GP or a specialist? Are you going to go insurance or non-insurance? And then when you answer all those questions, then you're going to be able to find out if a startup would be better than acquisition or not. But again, if you can find a good acquisition, I would go first with acquisition.
Perfect. Mina just followed up with that. Is the bank saying on your acquisitions or on a new startup, is it eligible for any loan or government loan help or assistance now? Also, tax-wise, what may I need to do in addition to what Amr is saying now?
So I don't believe the government will give you money to do a startup. You can always use a bank. A lot of banks around, everywhere. There are national banks and there are local banks who are lending money to dentists. I know that things after COVID became very strict and very tight, not as it used to be. So you need to check with banks and see what they can offer you. But definitely I have seen still banking, lending out there. It all depends about how long you have been out practicing, what's your monthly production, how much cash you have, what's your student debt. So many other factors will determine if bank will have the appetite to give you money or not.
Perfect. We had touched on, hygiene production being a certain percentage of the practice. Paul, what other questions do we have on our list?
Paul, you are muted.
Paul, I believe you are muted right now, so if you want to unmute yourself.
I am sorry. I'm sorry about that. We had a couple questions come in, one from John, and you addressed some of this about capital equipment, but a question is, I'm nearing retirement in my practice. What's the best, in your opinion, the best ways to grow? So should we focus on capital equipment or increase productions or other ways?
If you buy all the equipment and available for you and you don't have patients, then there's no point. You're not going to be able to grow. And if you get a lot of patients and you don't have sufficient technology and sufficient staff to support the patient, those patients are not coming back. So it will be coming down to how do you run your office. You need to look at your metrics, how many new patients you're getting, what type of treatment you do, your hygiene, if you have an associate or not. I think there is no one magic answer. It's going to be more about, you have to look at the whole, it's like treatment planning. When you go examine a patient, you look at the teeth overall, and then you're going to say, where I'm going to start and what is the end. So how can I make a nice smile out of this mouth? This is going back to your office. How can I make it bigger? So it's going to be a couple of things. It could be an extraction, could be a crown, could be a fitting, could be a combination of all. You might need to have an ortho, which means going back to your office, you might need to, to add a new equipment, which is going to be like an implant. And then you need to do a lot of marketing and spend more money and training on your staff, which I call it like orthodontics, the orthodontal work at the office, because you have to shift you have to shift your staff around and you have to train them to make them more efficient, more stronger, the teeth, more straightened. And then you're going to look back at yourself and say, okay, what's my skill set? What do I do? How can I improve my treatment at the office? I'm using all the technology available? Do I need another technology? it's for example, like I have a lot of dental offices, they don't use their intraoral camera. They spend like $10,000-$15,000 on intraoral cameras, and nobody's using it to take pictures to show to the patient, why they need the crown. And then they come back and say, nobody want to do the crown. Because remember, patient will never, ever be able to understand where you're coming from until you show them where the problem is. And then that would convince them, oh my God, this is how my teeth look like now, then I need the crown. So remember, it's going to be a combination of everything. But I think number one, you need to assess your new patient count if you want to grow. Number two, you need to assess your recall and your hygiene production. Number three, you need to assess your production as a dentist. Number four, you need to look at the dynamic, at the office, which means is when you and the hygienist work together to present a case, can the front desk close it or not? And if they do they collect the money or not? Once you answer all these questions, then you're going to probably solve about 80%. And then you're going to start saying, I need the iTero to do more. I need the CEREC to do more. I need the CT to do more. I need the Prime Scan to do more. And then you're going to buy the technology that will fit your office. And what are you trying to achieve? Are you trying to do more implants? Or trying to do more ortho? Or trying to do bread and butter veneers and just like crowns?
Perfect. Thank you.
Great. One more here coming in from Bobby. Do you have thoughts on benefits of remodeling my practice versus building?
To rebuild a new office, I'm not a big fan of it. It will cost you about 100. It all depends where he is. Can you ask Bobby where he is?
Yes. Bay Area, Walnut Creek.
Okay, so you're looking at $150 per square foot just to do a new office. So if you're going to be moving to 15 to 2,000, you're looking at about $350 just to build up. And then you're going to have to go through a radius, which means you cannot just move 5 miles away from your current location. You have to be within a mile. So you need the chance of finding an empty space within a mile. And then you're going to need to build out the space. While you are building the space, you need to maintain your current space. So you're going to end up paying 2 rent on the same time and carrying the overhead for 2 places. So why would you do that? I would definitely consider remodeling my office. It will cost you $40 square foot versus $150, and you can do it over the Thanksgiving and Christmas and year-end holidays. So you don't have to shut down the office. You didn't have to pay 2 rent, and it's convenient. Unless you're gonna say my office is tight, I only have 3 chairs, and I cannot fit a 4th one, and I cannot fit any patient for the next 6 months. Then maybe relocation is a good option.
Perfect.
Great. Jim, did you have anything else?
I think that's coming to the end of our questions. We're going to do one last roll call if anyone else has questions. We went through several on there. Now is your chance to get your last minute questions in there. Amr, I would like to talk a little bit more about Synergy consultants and CPAs and what you do. I know you're going to be speaking down in Florida here in the next couple of weeks, you told me, or maybe this week?
Next week I'm flying down to South Florida. We have a couple of speaking engagement and meetings down there. So, historically, if you scroll down a little bit, Paul, you're going to find that we used to have an annual symposium. And our annual symposium used to have about 300 dentists to 400 dentists attending. It was a 2-day full event that we discussed full business topics. Unfortunately, we skipped it this year, so you're not going to see the link anymore. It has been taken down. So our annual symposium was about, like every year we get about 300 dentists. We have about 12 to 14 speakers, and we talk about different topics, from legal to accounting to tax to practice management to transition to setting up your structure, HR, all aspects. And every year we used to rotate the topics left and right to make sure that we are covering all the business challenges that dentists see day to day. Unfortunately, because of this year, we couldn't have our symposium because of the pandemic. We are hoping to have one in 2021 if the environment permits us to be back again in one room all together. So we're looking forward to that. But we always post a lot of webinars on our website. And if you are interested, you can send us an email and we will send you a link to all our upcoming events where we're going to be speaking at. And also you can be on our newsletter. We have a newsletter that comes out every month that we talk about the new pressing, I would say, items that's happening around us, and anything that we feel it's impacting the dental community. There's actually a video from our 2017 dental symposium. So we believe that all my team and all my accountants and all my financial planners, we work only with dentists. We work with dentists day and night. We work across all their careers, from the time they come out from dental school to all the way up until they retire. And we help them understanding the importance of financial freedom, importance of running a successful office, understanding their numbers, understanding where is the opportunity they can improve their profitability. And the most important part is we like to work with dentists who are looking for potential growth and looking to acquire maybe second location, or maybe looking for expansion for their current offices.
Perfect. And I also put up on our slide here a little more information with your website on there. I know it was kind of a little minimized on mine. It looks like there's your team there also. Yep. Gotcha. We will have Amr's contact information in the follow-up email. We do have a list of all the questions. I know there were a couple things, so you will have access for contact with Synergy consultants there. Amr, we want to thank you for your time today. Very valuable topics. I'm sure we'll have some more questions come up afterwards and as the day goes on, or tomorrow and things. So we will look forward to communicating with you. And we do thank you for your time.
I would like to thank you actually for taking the opportunity and taking the time to organize this event. I would like to thank everyone here on the call as well. I wish everybody a great night and a safe, remainder of the winter. And if anybody has any questions, please feel free to reach out. Me and my team would like to help out. If you have any questions or have anything to ask us, we will be able to help you for even a second opinion.
Perfect. Yes, and yes, thank you so much. And we do have, Paul, we do have a couple events coming up moving forward. So one thing I do want to point out is all of this whole session was recorded, so everyone will have a link to that. We can also, this recording will be on our website, so you can see that at vatechamerica.com for follow-ups there too. So we are going to record this, and everybody will have an access to that recording. So, all right, Amr, thank you again. Paul and I are going to go into some of what we kind of have coming up. We talked about earlier. Paul, what do we have? November 20th, Fast Track Friday.
So just a few short weeks. Again, we have our Fast Track Friday series, session 1 and 2 on Friday, November 20th. And then first Wednesday of the month, December 2nd, we're going to have Omar Zier of 3D Diagnostics talking about digital workflow and making it easy and quick.
True. I think that kind of directly ties into our topic today of chair time and increased production. Right. How do we use, in this case, CBCT, intraoral cameras? How do we make that digital workflow easy? How do we move to a guided surgery workflow? What are the benefits? Does it work for my practice? Or how can I incorporate that? And then ultimately to get our staff involved and excited about our new technologies. And I think that's educating our staff will also add to the benefit of the new technology. And that kind of jumps back to our November 20th Fast Track Friday series, educating the whole office on these new technologies and workflow there. So
Right.
we do have on our website some educational opportunities for everyone. VatechAmerica.com. We have our Customer Learning Center here, and our webinars are recorded down here on the lower right. You can find those. You can find information about the device you may have, software you may have, and then ultimately our webinars here. So also have an FAQ center on our website specific to the Vatech software, installations, things like that.
Updates, yep.
Yeah, updates, and then FAQ items there. So we do want to thank everyone for joining us tonight for this very valuable and timely topic. Thank all of our Vatech family, our internal employees, our district salespeople, and also most importantly our clients out there. And if you're a potential client, please check us out. Check out the Vatech family, our website, what we have to offer. I think everyone will find a difference and have that Vatech assurance for your office and your practice. So Paul and everyone, Amr, thank you so much for your time, and we will see you, if not November 20th, we'll definitely hope to see you early December for our next session. Gotcha. Thanks again.